Assalamualaikum and hi everyone. In this video, my group would like to talk about one of the unethical issue in finance, which is fraudulent financial reporting. What is fraudulent financial reporting? According to Omar Ahmad Yusuf, fraudulent financial reporting is an intentional act or omission that result in the false information in the financial statement. It is an unethical conduct with the intention to deceive stakeholder. In Malaysia, the Capital Market and Service Act 2007 was introduced to tackle this issue, whereby anyone who commit the offence is liable to up to 10 years imprisonment and fine not exceeding Rm 3 million. There are three accounting standards for financial reporting in Malaysia. However, there is no guarantee that fraudulent financial reporting will not happen with the issuance of this accounting standard. Therefore, ethics in financial reporting play a crucial role in maintaining the truthfulness of the financial information portrayed in the financial statement.
A thread of studies clarified the fraud management in the agency theory. The theory characterized the agency as a connection between principals who delegate position to a subsequent party known as agent to perform activities for their benefit in return for a profit. However, the decisions of overstating revenue and understating losses shows that people act in a self-interest manner which goes against the theory. Cases of fraudulent financial reporting and accounting have happened at all times all over the globe. Malaysia has seen a phenomenal episode in this unethical practice among public listed companies on the Bursa Malaysia. The same goes to China, where they also involved in this issue among business organizations. The first case is in Malaysia. Gan Wan Un, Transmart former CEO, who was sentenced in August 2020 by the Sessions Court due to disclosing a misleading statement to Bursa in its unaudited financial statements. Gan has been making invented transactions between its company and 20 personal clients in order to give perception that its performance was in line with the market expectations. The CEO sentenced to a fine of Rm 2.5 million and 1 day imprisonment. Now we move on to China. Luckin Coffee has found overstating its profit and understated its total losses in its financial report in 2019. Then in the April 2020, as much as 2.2 billion yuan in sales were falsified by its CEO Jian Liu and other staffs. They made a bogus transaction through 3 separate buying schemes. The fabricated numbers equalized to around 40% of Luckin's yearly sales. The company was delisted from Nasdaq and consented to pay fine amount of £180 million.
First factor in Malaysia is ownership factor. Ownership which are family and foreign ownership. Family ownership may affect the demand and supply of high quality financial reports, for example, entrenchment and alignment effects. Furthermore, foreign investors are likely to insist on higher standards of governance and protection of minority rights. Second factor in Malaysia is political connection factor. A politically connected company is a company that is owned and controlled by major shareholders and senior managers who have connection with politicians. These companies generally profit from their connection in addition to the payment they receive. Next, first factor in China is pressure. China companies facing financial pressure are more likely to be associated with financial fraud. This suggests that companies in China with high debt and plan to issue stock are more likely to inflate this year's earnings and restate the status of their financial reports in subsequent years. Second factor in China is opportunity. Financial information service company in China use the dynamic effect to obtain excess return in a short period and subsequently sold a large number of company stock when the stock price peaked to realize illegal cash out. Changing the company name can divide the attention of regulator and investor and provide favorable opportunities and time to promise financial fraud.
So now, let's move on to the solution which will be taken by the company in order to prevent the financial reporting fraudulent. First, the key of detecting and preventing fraudulent in financial reporting is by having an effective and adequate corporate governance system. The management needs to establish the internal control as part for the corporate governance structure. It is created to keep management from manipulate the financial statement. Next, as mentioned before in the section of the cases in Malaysia and China, it tells that the senior management members are involved in fraud by fictitious business transaction. Therefore, the management should pay specific attention to the senior management. The board should strengthen the functioning of audit committees, and the audit committees should review and approve the company's annual report to ascertain that is aligned with audit committee's expectation and address the management fraud risk. And the last one, by having collaborate with external auditors, they can help to uncover fraud and accounting improprieties when there may be something wrong with financial statement. It can help to deter employees from presenting incorrect financial reports.
The goal of most fraud is to present the firm in the best light possible. There have been numerous incidents in Malaysia and China where financial reporting has been falsified in order to inflate a company's value. Unfortunately, financial reporting fraud is a major blunder. Quality in financial report is a primary tool for assisting users in making investment. Many people realize that the firm's image is quite crucial in order for the company to have a strong reputation. The improper financial report, which is not clear, might make it tough to understand company's financial situation. That is why it is very important for a company to have a quality financial report in order to improve overall market efficiency by positively influencing capital providers in making investment. It can also give the company a better understanding of the entity's financial situation and cash flows. Thus, it is healthier to just be honest by preventing false disclosure. It is okay to be at the bottom for a while in order to rise than having a large corporation that commits fraud because of poor financial results in a given year. There is no such thing as quick recovery from any wound. Thank you.